Well, g'day everyone, it's Liam Gumman here, editor of Real Estate Business, back today with another episode of Barbecue Tips with Matt Tiller, my good mate, and the guy, I think it's very reasonable to say that every time we meet up, I package up all my really dumb questions for you that I'm too embarrassed to ask people, and because you're so nice, you don't judge me for them.
Well, this is what Barbecue Tips is all about.
That is.
Questions around a barbecue. And everyone has questions about property markets, so I'm always happy to answer them.
Do you ever get tired of it?
I never. Property is always good. There's always something going on in property, and that's what's great.
Yeah.
Always exciting, always different markets to talk about, always something that changes week to week, really.
And you've jumped the gun. There's different markets to talk about. We are going to be unpacking different regions. And it's a question that I get all the time of, hey, Liam, do you think it's right to invest in this suburb I've never heard of, in a city I've never been to? Not every market is performing at the same rate across Australia. Some are seeing absolute growth over the last 12, 24 months, others not as much. With that very broad question, what are we seeing across different regions across Australia?
Yeah, well, it's a really interesting time at the moment because, this time last year, we saw a real divergence across markets. We saw WA, SA and Queensland all booming while, Victoria was very soft and New South Wales was a little bit soft. So, it was a real divergent market last year depending on where you were looking. Fast forward to now, and it's actually been quite consistent over the past probably 3 to 4 months. That monthly price growth has been consistent across pretty much all capital city and regional markets. Victoria's come back to play, and it's good to see the consistency come through. Yeah.
I always thought with the Victorian market, it was always quite interesting about the lag. And correct me if I'm wrong. I always would have thought that there's an arbitrage there, right? Because if you've got so many buyers going into, say, Perth, Brisbane, Adelaide, which have been hot markets for the past 36 months, right? Surely there comes a point where you almost arbitrage out that few $1,000s that you get in land tax, and then suddenly the yields they do stack up relative to cities where the house price might have gone up 40, 50% over the last 24 months.
Yeah, I think if we look at the Victorian market where it was last year, it really shows how important supply and demand was, because in those other markets that were booming, there was very little supply, little newly built supply and new listings. Whereas if we look at Victoria last year, listings were well above average levels and well above where every other market was. But in saying that, there was still buyer demand. Buyer demand was up about 10%, but listings were a lot higher than that. So what that means is whenever we have supply higher than demand, prices are going to be soft, and vice versa, like we saw in the other markets. So I think it's just that fundamental that whenever you're looking at a region, no matter where it is, that's obviously the first point of call is what's the supply and demand balance there? Is demand going to continue on over the short, medium, long term? And what's supply doing over that period as well? So, and that always drives, at a macro level, what's happening in particular markets.
In Victoria in particular, what led to that increase in listings? Was it maybe a slower economy? We've seen a lot about the quote-unquote like investor exodus. Or was it, given that you also had quite healthy buyer demand there as well, was it just a case that people saw an opportunity to upsize or downsize as needed? What led to that increase in listings?
Yeah, I think it was definitely really driven by, the investors. There was change in regulations in the Victorian market at that time targeted towards investors. A bit more cost was put onto investors within that state. And those investors that had a particular, budget, and they had a particular cash flow worked out for them, it just didn't stack up anymore. So they exited that market, and that increased the listings above what normally would have been in that market at that particular time. We also saw interest rates at very high levels at that particular time. So we were seeing listings a little bit higher, across the country. So that sort of just added fuel to that kind of listing fire, if you like, in the Victorian market at that particular time. But saying that, now it's come back because investors are now looking at that market because prices have been soft, rental growth has been pretty strong, yields are quite healthy, and now investors know about those regulations and those additional costs. They can build that into their budgets and their cash flow moving forward, so they're happy to go back and invest in that market.
So it has been priced in. When we first met, it was a while ago now, and you and I, with some of the team at LJ Hooker, went out to was it Sydney's Cafe? Is that what it is?
Yeah,
one
that's
overlooking,
right. Yeah, Sydney Cafe,
Sydney
beautiful
Cafe
spot.
in overlooking Circular Quay, and you and I were talking about building prices, and in particular, that it now costs so much to build a new dwelling that a lot of people look at that. A lot of investors in particular look at that and say, well, then I'm just not going to do that. I'm just going to buy established dwellings in that outer metro or regional area. Looking at that cost to build a new house and obviously the impact that has on supply going forward, because if it's just not economically feasible to build, if you don't get the supply, are we seeing any changes in the cost of development and construction at the moment, or should we expect that supply over that medium to long term will stay quite low?
Well, supply is going to always be a challenge over pretty much the short to medium term. We have seen the rate of construction costs begin to moderate. So costs are still going up. They're just not going up as fast as where they were, say, this time last year, when it was really putting pressure on developers and those looking to construct a new home. There's still labour shortages. There's still cost pressures on materials as well. But some of that has started to come back. And in the meantime, we've also had price growth. So the price growth we've had, it makes it stack up a little bit more. It makes the feasibility come together a little bit more. But in saying that, supply is still an issue. We're still not getting that kind of large scale supply coming into the market, particularly, planning reforms haven't come through yet. There's been some attempts at it, but, planning red tape is still holding up a lot of developments from coming out of the ground. And we've seen, investor demand, investor lending pick up over the past 12 months, and it is quite strong. So it's not that there's no demand from investors. It's just that the product isn't stacking up for them at the moment, and that's why they're not purchasing on scale to help get the supply out of the ground.
And I think that's consistent with a lot of people's reads on the ground. We already touched on that. Regions don't move in a uniform fashion. I'm going to put SA and WA together because honestly, it seems like over 24 months, right? It kind of, this massive boom. Yeah, I say it came out of nowhere. But obviously, when I speak to a lot of people in real estate, whether selling agents or buyers agents, and people are like, you've got these amazing places, 3 minutes from the beach, you had really good incomes in the area, it was so affordable, it was low hundreds of thousands of dollars. Of course it was always going to boom. Some people saw the writing on the wall. I wasn't smart enough to. Matt, can you take us through the WA and SA markets at the moment?
Yeah, well, they're very strong at the moment. SA has continued along pretty much the same path as where we saw it last year. Very strong market there in Adelaide. We've had investor interest there. Affordability has helped that market along. We've seen population growth continue to pick up down there as well. There's been some good jobs growth in the market. I think affordability, rental yields has really helped drive investor demand into SA and as well as WA as well. WA, before this current boom, it was a pretty affordable market. It was coming out of a bit of a slump.
It was like 10 years plateauing or something. Yeah, the data was pretty crazy.
Yeah, so it was always ripe for investors to go into that market, but with a combination of steady population growth, They had a pickup in their economy, and that real lack of sort of new supply coming into that market. Again, that demand-supply imbalance was ripe for prices to take off. So they've both been pretty strong over the course of probably the last 2 years.
That iron ore economy, it's pretty good. It's pretty helpful. Looking up at Queensland. Now, obviously, Queensland's a very unique market, and I could say Queensland. What isn't it? The drive from Brisbane to Cairns is longer than the drive from Brisbane to Melbourne, I think, is the mileage of it. So, I mean, we're talking about it's pretty multiple markets. Yeah. Also, the only state in Australia where more people live out of the major city, as in Brisbane, in the capital city. More people live outside of it than in. So there's a few hotspots, a few markets, even within Queensland. Broadly, what are we seeing in Sunshine State?
Yeah, I mean, it's very healthy property market there at the moment, very active property market. We've seen a lot of the regions grow incredibly fast over the past 12 months from a price perspective. Brisbane itself, I mean, there's a lot of interest in Brisbane at the moment. There's a lot of talk about how, the infrastructure spending in the lead up to the Olympics is going to drive that property market. We've seen a lot of population growth as well, particularly since COVID. I mean, really, it's been 5 years of that kind of intrastate migration from Victoria, New South Wales, moving up to the warm, sunny coasts of Queensland. So that's really helped drive the Queensland economy, the Queensland property market as well. Supply hasn't kept up with that kind of growth in the population and the economy there. And particularly in those regional markets. I think Townsville and a couple of those far northern regional markets have been the best performing markets over the course of the past 12 months. So, price growth, above 20%. So there's some really strong property markets up there, a lot of investor activity, but then also a lot of first home buyer and owner-occupier activity, retirees and sort of those downsizers moving into some of those kind of, quieter regional markets.
And this is only going to get hotter. And talking about the first home buyer activity, as of January, when your new first home buyer guarantees roll in. So I think the grant goes up to $30,000, correct me if I'm wrong, $30,000, but then also a lot of those challenges which hamstrung a lot of previous first home buyers have now been lifted. And I can look, at my own journey, right? My wife and I never used the first home buyers grant ourselves because, when we first bought out a property, it was it had to be a new build up to a certain price. And you're like, well, that price out all of Sydney. You're not actually going to be able to do it. And a lot of the data now, if you do have a $30,000 grant plus reduction of stamp duty, and my understanding it is you can access it up to the median price of the city plus 10%. So there are going to be whole swathes of the southeast Queensland market, but obviously also the regional markets as well, where reasonably a young buyer can come in with really $0 to their name. Obviously, they've got to be able to get a mortgage. They do have to have some demonstrated savings, but realistically, I think that there's going to be a lot of areas in southeast Queensland that will probably boom off the back of that because you're just going to see that whole new wave of demand roll in without the supplies you've highlighted.
Yeah, absolutely. And obviously there's federal government incentives as well that have come in over the course of the past 2 years as well that help first home buyers and low income families as well. So there's a lot of incentives out there that buyers can access. And I think, like you say, as those policies come into play at a time when mortgages are going to get cheaper with the RBA cutting rates over the next 12 months, so there is a lot of fuel, if you like, to go onto the property fire in Queensland, and in that affordable end of the market. Pretty much in most capital cities, there's incentives from governments to get into the property market. So that supply really needs to come in over the course of the next couple of years to ensure that they can cover that demand.
Now, I'm not going to overlook Tasmania and Northern Territory because I know LJ's got some amazing principals, amazing agents, amazing directors in Tasmania and NT. Also, markets that have been quietly booming, and I would say quietly booming in the sense that the Darwin market is really hot at the moment, and a lot of markets in Tasmania as well, but they don't necessarily get the limelight.
Yeah, Tasmania has been a bit of a mixed bag. I mean, we have seen some softness across some of the markets regionally in Tasmania. The state government hasn't been the most stable of governments over the past the past few years. So I think once the government can bring some stability from a political sense, that will in turn help drive that kind of economic confidence and economic stability, and that will help drive the Tasmanian market a little bit down the track. From a Darwin perspective, that market's been really on fire, I would say, over the past since the start of the year. I mean, it's been the best performing market over the past quarter. It's had the highest annual price growth over the past 12 months. So it's a real market that, again, you can see that prices there really flatlined, if not went down, for the best part of 10 to 15 years. And that affordability, again, really piqued the interest of interstate buyers, but also those locals in the market and investors coming from interstate, because it's really gone gangbusters. And different parts of that market, there's that Palmerston market is a good family area where there is a couple of new housing developments going up, and they have seen really good demand, really good price growth from the locals, as well as interstate investors as well. And then you have the Darwin City market as well, with they've got a new university and things, a campus that's opening up, and so they've had a bit more interest from not just the student market, but also the tourism market as well has begun to pick up domestically right across the country. But that's come back into Darwin. So I really like the Darwin market. I think it's a really interesting one to look at, particularly because it has been no activity over the past decade or so.
Yeah, you did highlight it. I think it did dip at one point as well, like 8 years ago or something. But it is funny because when the rumour mill starts, people are like, when the initial kind of data starts coming through, whether it's quarterly or monthly, and you're like, oh wow, Darwin's really looking hot. And then I kind of do my desktop research. I'm like, some of the yields that you can get there as an investor, I was like mind blown. If you're looking for, from that investor point of view, if you're looking for that really good cash return, it's like, oh wow, like there really is a good market here. But you highlighted it as a city. It's also the economy it's got fundamentals behind it. You've got the big defence infrastructure up there and all the Americans up there, but then you've also got the university, you've got the natural resources. It does actually have a lot to keep it buoyant, and keep wages up there quite strong as well. Last but not least, Sydney and New South Wales. One thing that I hear, Matt, all the time, and especially after the rate cut the other week, was I kept reading it everywhere, which is the capitals are more receptive to rate cuts. I think that a few people said that, where capital cities, more primarily Sydney and Melbourne, they're more receptive to cuts. Why particularly the capitals?
Well, it's just really a factor of how big the mortgages are in the capitals compared to the regions. So obviously higher median price in the capitals, larger mortgages, and so obviously they have a bigger effect on, particularly the mid to premium end of the property markets, which generally are in the capital cities.
And New South Wales, where do we expect it's going to be over the short to medium term?
Yeah, I mean, New South Wales has again picked up from where it was last year. There was a little bit of softness in the market last year, but investors have come back into the market. First home buyers are back into the market. I think those rate cuts have really had a big impact on the first home buyer market in Sydney and some of those kind of major regional markets in New South Wales. And again, listings are pretty tight across all the LJ Hooker agents and officers that I've spoken to in New South Wales. They really are seeing a tightness in that listing market. Again, they're seeing the appraisal numbers come through, but the tightness in the listing numbers still is there. But they are expecting a good pickup in the lead up to spring and have a pretty highly active spring selling market, if you like, in New South Wales. That's what we're anticipating at the moment.
And that seems to align with just visually, anecdotally, what I've seen on the ground. I've seen a lot of investors actually move into a lot of units and apartments in Sydney because after those off the back of those rent rises, and we saw for 1 or 2 years just how quickly rents went up, and there are pockets in Sydney where you can get really solid, good, older build apartments that are just fantastic. That didn't keep up. And so you saw rents increasing in some of these areas and the rental yield increasing in some of these areas. So it is also a market to watch, even though sometimes we might gloss over it and look at some of the other hotspots across Australia. But look, Matt, I think we've armed our watchers with a lot of talking points for the next Barbie. I reckon we've got to crack into these snags.
I'm hungry. Let's dig in.